Hello, today is the 8th of October 2010 and another silver video for the weekend, and this is on the gold to silver ratio, and it's in a downtrend. Obviously they made this high of 68.5 sometime around the 20th or so of August, and it's one of the patterns that is easily best understood as if it doesn't scare you out, it's going to wear you out. It's slowly but surely going lower, seeing it go from 68.5 and is now obviously cracked below 58 ounces. And I received an interesting comment on one of my videos that I want to talk about, and this is the comment here. Hey Derek, I think a good in conclusion to your coming video would be the massive manipulation in technicals. I have many trader friends who fell for the charts and shorted silver and gold only to miss out on this beautiful rise, but I've seen very few videos on the actual indicators to traders warning of a coming drop. Well, obviously they're trading totally different than what I have been talking about on this page, because in reality, manipulation in technicals means how you're doing it, what type of methods, math calculations, formulas that you're using to figure out how to do things. For if there's manipulation in a market, then the technicals are going to tell us that. They will show us that within the Fibonacci, within the moving averages, or so many other great different indicators that are available. And if they are really good traders and they shorted silver and gold, then they should not be shorting it right now. When did they cover their short or sell their ETF longs on the short? Did they sell it when the indicator of Fibonacci went from cautiously bullish or cautiously bearish to neutral? When it went from neutral to cautiously bullish? That's the issue right there. And if you can see the manipulation, then you can make trades based on it. For if the technical analysis and manipulation was a problem, then I shouldn't be looking at this chart that has the numbers between the 50s and the 60s on it, because historically the gold to silver ratio was 15 or 16 to 1. And I'm going back to the 19th century when I say that, but since the 1900s, then we have seen well, all we have seen is the increase of gold go higher. It's a hoarding metal. They store it for value, for investment. Well, why is it so valuable? It's used in jewelry, and there could very easily be breakout innovations within it, and that's the big reason why, personally, on a fundamental level, I am bearish on this chart. And the technicals tell me I'm bearish, not just because of this move, but because of the chart that I'll show you momentarily of the last so many years. And if the fundamentals have stated over the last 100 or some odd years that the ratio should be lower, and we're looking at this at 50s, well, this shows us the manipulation. But if you're watching this channel or all the others, you know manipulation is obviously out there. So if people talk about a gold bubble, well, gold has bubbled, in my opinion, or has a good chance, but that's priced in silver towards here. Even though I think it's a bubble, that means gold would continue to go higher. When gold goes to $5,000 per ounce, it might meet silver at around $100 or $200 per ounce, which would thus make this chart go lower. Right now on this chart, we have this pattern where we move higher, we come back down towards here, and then have this little bearish flag that is obviously breaking down since then, as it has managed to come back down to its previous level of support. If we take a look at this from the bottom of, we'll say 50 upwards to 88 on some Fibonacci, and take a look at some where we should be holding the 65 level. The ratio of 65 to 1 was huge. This is the level that it had to hold. The technicals are telling us that this move higher is becoming that of a failed move. You can also make a case that we have what is a technical term of a inverted cup and handle. This is the pattern here. Basically what this means is you have your rally, and then you have a significant sell-off, which we did. You have a shorter rally, and then you come back down to its previous support level. Therefore, a range of 60 to 88 if we use the same Fibonacci calculator, would give us a price objective or a number objective to the downside of 47 and a third to 1 as the next level of support, which ironically meets up with these levels from 2006 and 2007. And that was an interesting little picture. I'm sure many of you may have figured that out. However, the charts in itself, it's looking to continue to go lower. The trend line that would be of importance right now, I'd have to go with this one in here. It connects a few key solid points. But nonetheless, the movements right now is for continued downside. It looks like WebBot is saying it's going to 1 to 1. I think it's going to 1 to 1. Not only that, my long-term predictions is for the gold and silver ratio over so many decades to go 0.1 or 0.3 to 1. But this is what the information I know today. You never know what innovations are going to come in the next so many years or what changes will happen within the supply and demand meter. If a massive explosion of silver inventories rise, then that reduces the value of them, and you never know when stuff like that is going to come into play. Thank you for watching. Have yourself a magnificent day. Bye-bye.